Welcome back to the Live Lounge here on day 2 of Open Banking Expo UK and Europe. I'm joined on the sofa by 3 guests. They've snuggled themselves up to speak to me today. So I have with me Ben Rattue from Token, where he is Product Director, Partnerships and Propositions. Joining him is Jonathan Vaux, Head of Propositions and Partnerships at Thredd. And last but by no means least, Adrian Burgess, Director of Payment Partnerships EMEA at PPRO. Today, I'm joined by our 3 guests to talk about the fresh data from our Pay by Bank Signals and Trends Industry Survey. So that's a joint survey between Token and Open Banking Expo. We're going to get unfiltered industry takes from these 3 voices who are deeply plugged into payments innovation. So welcome to the Live Lounge. Let's start with some of the headline stats. So we found that 93% of respondents agree there is merchant demand for Pay by Bank, and it seems PSPs are already responding. So 74% of PSPs saying they already offer Pay by Bank services. Actually, a really interesting stat. So 88% of all respondents expect moderate to very high growth in Europe over the next 12 months. And I'm wondering, is this optimism realistic or is it kind of wishful thinking? It's a good opportunity, I think, to break down some of the stats from this survey. And I'm interested to know about where you see the cracks or the fuel for some of this growth. So let's start with you, Jonathan. Is the hype real or is it just sort of market momentum?
Well, I think you are now starting to see better designed overall propositions that have these services integrated as part of that experience. So as an example, if I'm building a best-in-class parent-child app, I will expect the ability to support things like top-up capabilities or money send capabilities. And so what I think you're seeing, and we've seen a lot in our industry, is really smart people designing best-in-class products start to incorporate these components when they're thinking through how to deliver the best user experience. And so as more and more of these services are digital, these things could get plugged in as part of this kind of invisible kind of Lego brick in the value prop. And therefore they're really, they may not be really obvious, but they just become really valuable and just expected. And so I think once you can start creating those level sets, that becomes the kind of the minimum expectation for customers as they build out these props. And so I just do see more and more growth coming as these things stop becoming nice to haves. They become must haves if you're trying to offer a kind of a compelling value prop.
And Adrian, how much of this expected growth is driven by merchant demand versus PSP fear of being left behind, FOMO, if you will?
I think it's both. I think PSPs will always respond to the demands of their merchants, but then further down the track, merchants are always responding to consumer demand as well. And open banking has been sort of in a steady state of growth for the last at least 5 years. And we're on the precipice of some pretty important regulation, which will bring in functionality like BRP, which will drive even more adoption because the use cases that already exist will expand. So I don't think PSPs are worried about being left behind per se, as we know how many already have this functionality enabled. It's making sure they stay relevant, which is key for merchant growth in terms of payment method selection as well.
Mm-hmm. Ben, let's bring you in at this point. So, your vantage point is from the infrastructure trenches, if you like. What signs really tell you that the market is hitting a tipping point?
Interesting question. I think so. Picking up on what JV was saying about table stakes, I do think it's now table stakes. If you look at the individual players in a transaction flow, if you start with the users from the survey, most users have now used Pay by Bank, which is a huge change on maybe 3 years ago when only some people had. You look at merchants now overwhelmingly want it. PSPs overwhelmingly offer it. And banks are not so much seeing it as a compliance exercise anymore. It's more of a commercial opportunity. So I think the perspective along the chain has changed. When you couple that with pretty high expectations for growth, as you were saying, from the survey, add in kind of some really big name merchants adopting it, both in the UK and also in places like France. Token supports the likes of Chanel, SNCF and loads of other Castorama large merchants. And then you tag in the open banking limited growth, we're starting to see that real uptick happen. Okay, it's not a hockey stick. It's not necessarily a contactless moment, but I also don't think that's a particularly good analogy. So I do think the growth is coming. And ultimately, when you, as Adrian was saying, when you couple that with greater functionality and the kind of stuff that VRP in a non-sweeping context can unlock trigger-based payments, merchant-based payments. I think it's fairly conclusive that Pay by Bank is here to stay.
Yeah. Okay, so really exciting tipping point then. Lots of strong growth signals. We know though that it's obviously not just about expansion, right? There's sort of this deeper undercurrent building too. So the data that we found from our Pay by Bank joint survey shows that something bigger is at play. I think particularly around sovereignty and control in payments. So I thought this was a really interesting stat actually. Payment sovereignty ranks as a top priority for 75% of respondents, with a clear push to reduce reliance in particular on the US card networks. Now, is that a shock or is it something that you've expected for a while, Ben?
In my opinion, that's kind of a long-term trend that's seeing an acceleration due to the current geopolitical climate. So if you rewind 5 years, we had EPI launch, European Payments Initiative, which was openly stated goal to onshore European payments and trying to hedge away from American card schemes. That still exists, and its current incarnation is Wero. Interesting enough, Pay by Bank and Wero are actually fairly similar in terms of value proposition for consumers and for merchants. I guess the difference really is that currently Wero is only P2P, not merchant-facing, and it's only in 3 markets, whereas open banking is ubiquitous across the whole bloc plus the UK. But nonetheless, the existence of something like EPI 5 years ago pointed to a trend that had already started. So I think we're seeing that continue. I suppose there's also the angle of post-COVID, a lot of industries are trying to onshore their operations. I don't think payments is any exception to that. So yeah, I think it's an ongoing trend. I don't think users notice it too much. I think it's more a business concern, but that business concern would involve PSPs and merchants and banks.
And Adrian, from your point of view, do you think there's some sort of geopolitical events that are coming into play here, or is it pointing to a lasting strategic shift?
Yeah, I think we have to be careful with the term sovereignty. It's gone around in the news cycle again. It's become a buzzword because of the geopolitical state we're in at the moment. But Europe has not been dependent on US payment methods for a long, long time. This is why we have so many existing domestic brands across each of the individual markets in Europe. Yes, those US brands are present, but they're only part of the puzzle. They're part of every market we have. Some will be have more preference towards cards and maybe international wallets like PayPal, but other markets have a real strong preference already towards account-to-account based payments. Ideal in the Netherlands, Wero trying to address some of that unification across some markets where it's been fragmented. Germany's lost 2 pretty major brands in Sofort and Giropay in the last few years. There's a few gaps there that definitely need to be plugged. But the table stakes for consumers there is account to account, and it's not a case of there's a dependency there. I think there's an interesting play around whether unification of payment methods or interoperability of existing domestic brands, but they all play a role, and it's the same for open banking. It's got a really clearly defined set of use cases now that it's seeing growth in, and I think as we talked about already, new functionality will bring broader adoption across more use cases as well, but it's not going to disintermediate an existing payment. And like I say, I don't think there is true dependency on US schemes.
Okay. So there's a bit more to that than initially meets the eye then, maybe.
So,
Jonathan?
Well, firstly, you mentioned it was respondents. So I doubt any of the respondents are actually customers or users of the service from a kind of, I think that one of the challenges we have in payments is that, as the world has become increasingly global, banking and payments has become increasingly regionalized and domestic and stuff like that. And I think there's a real challenge in increasingly, certainly in Europe, we're seeing payments and switching being driven as a commodity service. Well, if you start increasing all the costs and they have to do that if you're a global player or you're supporting global clients who are, with global customer base, it's challenging. It's more doable with kind of cloud, but it's challenging. So I do think sometimes there's a risk that this becomes the political concerns are considered without any consideration of consumer experience or what does that mean for cost of provision of the service and making it commercially viable.
Mm-hmm. Well, let's dig into another stat then that emerged from this survey. So, and this was around variable recurring payments, VRPs, of course. So most PSPs and TPPs that we surveyed told us that merchants are asking them for VRP functionality. And while they told us subscription payments and loan and credit card repayments were the most requested use cases right now, PSPs believe VRP will deliver the most value in one-click e-commerce and in those subscription payments. So, Jonathan, as PSPs, and Adrian as well, what's your take here?
So I think that I haven't told this. I've been in payments a while, and what you saw was that as the internet came on board, cards were much easier than existing payment capabilities, and so what you then found was players created like card on file solutions and Amazon One Click and stuff like that. And then as mobile phones became more common, you had kind of Apple Pay and Google Pay, and cards always done really well for those types of transactions. But I think there's always been some transactions for which card probably hasn't, or it's got some challenges. And also, if you think of the alternative of things like direct debit as a customer experience, it's not a great customer experience. And so I think that the opportunity for transactions where I'm not buying something, I'm paying for a service that's already been rendered, like a tax payment or a credit card repayment, you kind of go, well, I probably don't need things like chargeback rights. I'm just using this as paying off something. And so I need a payment tool with different features. Now, I think the features of that are probably greater transparency, greater kind of visibility in the option to query or challenge in advance, where at the end of the day, all you've probably got is today, you check your bank statement or you check your bank app, and it will say, we've just sent this much out by direct debit. And so I do think that the opportunity to use that as the payment rail, but doing that with a UX design that recognizes the kind of key pain points or moments that matter for people who are doing some form of recurring payment or some form of transaction. And I mean, I always get nervous the first time I send someone money, because particularly if it's a large amount, it's like, can I send you £1 first to just check, So I think there's lots of things in that specific to those user experiences that people need to solve for. So I think that's the opportunity, and I think it's not just about the payment; it's about the user experience that's wrapped around it. If you really want to drive growth,
Adrian?
Yeah, I mean, I agree with everything JV has said. I think VRP has its place and will, as I say, broaden the use cases that open banking can be applied to. In my opinion, it shouldn't be a blocker to open banking being used now, as it already is. It is not. It's a requirement for some merchants who have a particular UX that they want to address with their consumers. So that's really important. I think where open banking and VRPs has been hamstrung a little bit is by the slowness of the regulation around it. And I think if we go back to the previous question around sovereignty, if we really want to maintain the momentum behind sovereignty in Europe, the regulators need to move quickly to allow the enablement of these functionalities, which are becoming table stakes for a lot of merchants and consumer expectations too. You can build some really quite creative UXs for consumers if you have the technology in place. But if the regulator's saying, we can't figure out how to let you do this yet, it makes it much harder. And so it can create stagnation. So I think it's on the regulators to move more quickly to allow the innovation to happen.
Yeah, I think some of those conversations have been happening at the Expo, actually, on the stages and probably off them as well, around that regulation piece. We're going to stick with VRPs. So while PSPs and TPPs reported really strong merchant demand for VRP, the majority also find current VRP use cases frustratingly limited. So perhaps unsurprisingly, only 40% of PSPs have actually developed VRP capabilities, and even fewer offer live VRP services. So we asked, with commercial VRP, supply from banks and demand from merchants is often referred to as this sort of chicken and egg scenario, right? And most of the TPPs we surveyed believe supply from banks needs to come first to enable that merchant uptake, of course. So, Ben, what's your take on this? And were you surprised by that finding at all?
Not at all surprised, which probably isn't a surprise in and of itself. It might work for a PISP, a TPP. But yeah, my view, it's very frustrating, this whole sweeping conundrum. My view on the supply-demand situation is when you look at the demand side, I think it's really, really clear, not just in the survey, but also generally in the industry. When you talk to merchants, you talk to PSPs, people want this. Functionally, it's a really, really rich piece of technology that can enable all sorts of use cases that Jonathan and Adrian have just been talking about. So I think from the demand side, it's really, really clear. But I would distinguish between merchant demand and merchant willingness to adopt. And actually, that could extend to PSPs as well. So while they may want it functionally, if it's only supported by a very small number of banks, ultimately the addressable market is still fairly small. Or when you hit checkout, very few users can use it. So it's about flipping that demand for the functional perspective to the willingness to launch it. And that ultimately is driven by supply from the banks. So I think bank supply has to come first. And for banks to have confidence to supply to market, they need to say the demand is there. I think the demand is already there.
Yeah.
As evidenced earlier up in the survey. And the other thing that I'd also draw out is if you look at the growth of single immediate payments versus VRP from Open Banking Limited, despite the fact that VRP is currently very restricted to very small use cases just for sweeping, the growth trajectory is way higher than SIP. And so as soon as you expand that, there's a reason to believe that the industry volumes in general will go with it. So I think demand is there, and that should incentivize the supply.
Yeah. Okay, well, let's talk a bit more then about adoption and what the survey brought up. So it revealed that the main factor that would drive consumers to pay by bank or to try it are incentives or discounts, maybe. Users who try pay by bank once tend to stick with it. So I guess my question is, how big a nudge is sort of worth it, really? Adrian, let's go to you first on this.
Sure. I think incentives can have their place. Rewards and loyalty are a known entity around the world, particularly prominent in the card space. Does it drive the right ultimate outcome for a new payment method? Sometimes yes, sometimes no. I think the key stat there that you mentioned is around repeat spend, and that's what you want to attract. With a reward and loyalty program, if you don't execute it in the right way, you run the risk of seeing an initial spike of first-time use of a new payment method. And then when the reward and loyalty goes away, so does the use of that payment method. So I think it can't be used in isolation. It needs to be used with general education. And that takes all of us, merchants, PSPs, and the banks, to allow consumers to understand why they should or why they can make the shift away from card or another form of payment method to try open banking for the first time and then continue it. Mm-hmm. Again, as we've been talking about, as the use cases open up with technology, that will create more stickiness and more familiarity with it. For those one-time purchases, which aren't on a recurring or regular basis, you need to have a combination of both education and understanding, plus potentially an incentive, again, when it's deployed in the right way.
Mm-hmm.
I don't think the industry has done a great job of explaining what it is. And there's lots of jargon, VRPs, open back. What does that mean? So I think there's a couple of things. One is think of it as benefit, not reward. So that benefit can be better customer experience, ease of usage. There may be some form of incentive up front, like switch and stuff like that. But it needs to be better. And I know you mentioned the kind of contactless moment. We all know that in the case of contactless, something like going on London Underground repeatedly, that was the trigger point. I was at Visa at the time, and that was absolutely the trigger point. So I think the risk is some of these things are irregular payment type, like a tax payment. I'm doing that once a year. So how do you build that behavior and comfort level with it? I think it's really important.
So apart from financial incentives, are there any other approaches that you've seen merchants take or that you think they should try to encourage adoption here? Anything bold,
I think so. One thing, I wouldn't necessarily advocate for this across any and all use cases. I think it's very use case dependent, very device dependent, very channel dependent. But what we've seen is people talk about pay by bank having a branding problem. I totally agree with what JV was saying about the jargon involved. You can actually just entirely remove that from the equation. So some of the best known and most trusted entities in any country are the banks. What does pay by bank involve? The banks. So when you get to checkout and you click pay now, at the right time for the right use case, instead of asking you to choose pay by bank, pay by card, Apple Pay, present the bank selection screen, most people will probably trust their bank, see the logo and click through and complete the journey. You can also have the alternatives somewhere at the bottom or something like that. But for certain use cases, not for every use case, but for certain use cases, we've seen them do that.
Yeah, okay. So setting aside industries like financial services with extremely high existing adoption of pay by bank. If you had a crystal ball, which vertical would you say is most likely to reach, say, 90% share of checkout for pay by bank next? Ben, let's start with you and go down the line.
Yeah, I think one that has a pretty decent chance is probably invoice payments. If you break down the structure of an invoice, the inclination to pay is very high. Similar, so we've seen credit card repayments has had huge penetration because it's a non-discretionary purchase. You have to make that repayment in the same way that invoice payment is. If you procure a service, you have to make the payment. So intent to pay or inclination to pay is very high. It's also got typically quite high average transaction values, which brings in the cost saving from the merchant perspective. And also, if you procure a service, the plumber comes around, they service your boiler, and they say, by the way, later this afternoon, I'm going to send you an invoice via email. You're going to pay. It's going to be a bank transfer, but a little bit different or something like that. You'll trust what comes to you. So I think there's a few different dynamics involved, but invoice payments has a really good chance of being successful in the space.
Mm-hmm. Jonathan?
I'd say look at the characteristics of the payment that would make it a viable option. So I think to your point, there are definitely, things like invoice payments where I don't need chargeback rights or stuff like that. It's something I've already consumed or bought, and in many cases there may be a separate contract in place between organizations, so that's covering all the protections. I think anything that is recurring and where actually I'd like, so I think the vertical I'd go after is kind of like anything that's on a direct debit, for me, feels like a good opportunity to go, there has to be a better customer experience than that. So I think if someone said to me on insurance, we'll give you greater visibility, you may get a better rate if you pay for this up front at the start of the year or stuff like that. Those are great examples of where, I'm happy to pay for that because to your point, I need the insurance. It's not like buying a plane ticket. So I think understanding those characteristics, and I do think, things which are today paid by check or by direct debit, and that's why I think some of the open banking things have not gone well, is like they've tried to compete with like point of sale cards. That's a pretty good customer experience, tapping your phone or tapping a card. Go after the areas where I think are far more, challenging today from a customer experience. And that to me feels like the ripe area for improvement.
Okay. Adrian?
For me, it's an industry where I'm surprised it hasn't already taken off as much. It's QR codes on tables in restaurants and bars. It's an opportunity that can be taken advantage of right now. You don't need VRPs for it. You can set up a great UX for consumers. Most people have their mobile phone at the table, and we've gotten really used to that experience of being able to kind of self-serve in that restaurant and bar environment. It's those one-off payments that you make probably quite frequently, depending on how often you go out for dinner or for drinks. And it is a great way to socialize that technology in a very familiar and accessible way for everybody. It essentially becomes an e-com transaction on your phone.
It's really interesting how QR codes have come along since COVID, because just last week, my phone camera broke. And it was like, is this bad enough? I need to go and buy a new phone.
Yeah.
And my wife was like, well, you don't take that many photos. I'm like, it's not the photos I'm worried about. It's the QR code reading.
Yeah.
It's become so much more commonplace now. So I do think that's a really good example of where actually as part of kind of digital behavior changes and evolves, that's a really good add-on to that kind of experience. Yeah.
Yeah, I mean, so actually just to add on, I think by the time you've called the waiter over, they brought the bill, they brought the card machine, you told them you need to split it 3 ways or whatever. Actually, if you've just got that on table and you bring it up, you can, because it's digitally native already, you're on your phone, super quick. It's probably quicker than actually calling them over.
Yeah, and the UX is great, right? Because it will be browser to app or app to app within the phone. People are used to that experience, used to using their mobile phone in that way. Few clicks, and it doesn't need to be one click, but it's very few clicks and the payment's complete. You can get up and leave the restaurant. So I think that one is primed to grow and could happen tomorrow. But I think it's a case of merchants being brave and making that investment.
Mm-hmm. Mm-hmm. Well, thank you so much, Ben, Jonathan and Adrian, for joining me in the live lounge to dissect some of those key findings from our Pay by Bank report. I really appreciate it.
Thank you very much.
And the report will be available on Token's website now. You can download it from there. It's full of rich data on today's most popular pay-by-bank use cases. It also contains some insights into how the industry views its security and consumer protection, of course, and how banks are monetizing open banking and pay-by-banks.